Can I get a mic test for whoever's online? What's going on, Adrian? Can you guys hear me? I'm just typing the live chat or on our Discord. All right, cool. So since we're recorded, I'm not gonna wait on everybody. I'm just gonna jump right into it here. One second though. Gotta make sure I got the YouTube live chat pulled up also. All right, so I don't know how everybody else does it whenever they broadcast live on YouTube, but now I've got my phone set up for live chat in case you guys are not on our Discord. But if you guys are, hold on. All right, sorry about that. I had to turn my voice off there. All right, so let me. Okay, so here's our Discord, guys. I am connected to the live alerts and scanner voice. And I'm also in the one-on-one review section. So if you guys have questions, you can either type here or you can type on our on the live chat on the stream itself, and should be able to see it. Now, what we're going to be talking about today, we're going to be talking about how to utilize the scanner that's provided in the room completely free. It's a trade idea scanner. You guys can thank Static for that one. Thing is, it's custom made. The guy is on point with this thing, and I've made a ton of money, and I'm sure you guys have also just on that scanner alone. So we're going to be talking about how to utilize it pre-market, which we went over in the last video, but I'm trying to do this video as a streamlined version. That way it's more straightforward. It's not talking around in circles about 50 different things over an hour and a half where nobody knows where to start the search. So what we'll start off with is the up gapper portion of the scanner. Then we'll look into pattern recognition. We'll talk about shippers. We'll talk about how to trade stocks out of a trading halt, whether it's trading halted up or halted on the way down. I'll kind of give you guys, some pointers on that. And then I'll also go over time of day and time of week and how that affects trading day-to-day basis. So jumping into it, we'll pull up this scanner here. Okay. So this was on the 16th, and I thought that I had screenshotted, Monday through Friday, and I was going to talk through all of them, but I've only got Tuesday, Wednesday, and Thursday. Now, for those of you guys that are in Discord, we've got multiple rolled members. Everyone's calling different stocks, same stocks. Everyone's got their different ideas, but what it all boils down to is this part right here, the up gappers portion. So whenever you're looking at this, what you guys need to look at is, if you've been trading a while, you can pretty much just look at, okay, we got a shipper here, LMFA is kind of a cult stock. I think, was this a reverse split day? I don't know. I'm not even thinking right. AGRX, that's a penny that's been moving up and down over the last couple weeks. But outside of all that, you guys have to look at the float size here. So you got like a 1.1 mil, that's ears. We know ears ran hard up and down. You got some other ones there, 51 mil, like load. So you're looking at float size, you're looking at the name, and you're looking at the volume today, okay? And you could look at all the gap percentage, the gap amount, like how much it's up or down or whatever it is, but in this case, it's up. Or you can just look up the chart itself. So with this being the 16th, let's look up. All right. PRPO had 500,000 volume there. Ears has 1.3 million. And it's pretty much all I do in the morning, guys. I'm looking at these ones. I'm looking at float size. I'm looking at the name. I'm seeing this one's got 500,000 AGRX. We saw it moving the other week, so this is put on my watch list automatically. I'm looking at ears. It's $1.58, but it's got a ton of volume. So this is put on my watch list, but with the market trend that we've had, it's been a lot of the under $1 stocks have been more reliable as far as where they're going to bounce from, where they're going to start going from. Resistance breaks actually continue on. Once you get to, over where we at? Years. Once you get over $1, let's say it's at 158 and 160 has a 20K wall. As soon as it starts taking that down, a lot of people would jump in, but then, the market's been really funny lately with the resistance breaks that they just kind of end up going down sometimes, or they break and then drop hard and then run past it. So it's kind of like a weak hand shakeout. But strictly just looking at, the morning, we've got FLKS that's got a ton of volume, PRPO. And this is just building your basic watch list. And, if it's a lower float and it's got, 40,000, like Ogen, for instance, it's 4.5 mil float. This is obviously going to be put on the watch just based on the float size, even if it doesn't have the same volume that you see here in ears. So we kind of build a big watch list. And let's say you start at 8:30 in the morning. You can't trade till 9:30 for stock users, or even for Robinhood traders, they can only trade at 9. Come down at 8 o'clock, see where the volume is. 8:30, double check again and see where it is. Take screenshots, see how the volume's changed, see how the price actions changed, and then go from there. So here in a minute, we'll pull this stuff up. Let's see what other ones we have. So it's day 2 on some of those, I think. All right, so OHGI, I know that one was being called in the room. It was going up and down. Hold on. How early this pre-market scanner is available? It depends. Static usually puts it up, pretty early, 8:30 to 9, roughly. But I mean, he's a busy guy, so it's not always, right then, right there. But he does offer the a discount code if you guys are interested. Just it's Static. It's how it's spelled. If you guys are on Discord, just go ahead and send him a message. I think he's posted in the room before. He can get you guys a discount, referral code, whatever it is. But the only difference is it won't have the custom scans on there. So how he had it set up and how it searches for, stuff based on float size or, percentage change in price or the gap or whatever it may be. He's got those custom scans that he has personally. So you would have to basically set it all up yourself. So if you guys do trade pre-market, that could be, a benefit for you just to send him out a message. But you would have to pay for that one. Atlas as a whole, Static as a whole, I guess, basically, pays for the scanner itself and gives it free to you guys. So, if you're just, trading, 9:30, then it could be a huge benefit for you. And I stay away from pre-market. I used to trade pre-market and after hours. And then I found out that, I'm sitting here trading, so many hours in a day. And it's just like at that point, I could trade from 9:30, come down 8:30, look at the market, see how, 9 o'clock happens whenever we get the Robinhood traders on there. And then, as we come up closer towards that 9:27 sell-off before we hit 9:30 on a lot of stocks, I could literally just trade till 11:30 and be done for the day. And, make my money, make my daily goal, and then each week make my weekly goal just based off that. So for me, just even if it comes out at 9 o'clock, that's more than enough for me, And I use his scans, honestly, rather than anything else. I know some people go on FinBiz and, some other sites also and just kind of pull the resources together. But, his scans are so on point. His dip buy scanner, the up gapper, it's got all the information I need to set myself up for a day. If you guys watched the previous video, I kind of go over building a watch list, kind of somewhat how I just did, going based on volume, based on the float size, based on the ticker name, and then you pull up the price action. All right, so right here, you guys can see Yeko, and this was Wednesday. I don't remember time of day on this. I think this was around 9 o'clock, maybe a little bit before, or a little bit after whenever I pull this up, but it doesn't really have much volume, and we saw how this ended up running. So let's go ahead and pull up Yeka real quick. And this was the 17th. And I have all my charts set up. I mean, we've got drawing studies, no style. This is the equivolume. Kind of makes it easier. That way you guys, I don't know if you guys are on mobile or not, but it makes it easier for you guys to see that, you know, this is a volume bar. It's basically putting the volume in the actual candlestick itself. So if you guys are looking at, you know, strict patterns and chart setups, I mean, equivolume might not work 100% because it's kind of hard to tell what kind of setup this is compared to your candle trend here. So this is normally what I'd say 95% of traders go off of. And for the video itself, I was going to put it in the equivolume, but no, if I got it maximized, it's all good. What's a gap? Hold on. Let me see. Oh, I'll just do it this way. This could be considered a gap, but this is on a 1 hour time frame. Hold on, let me go back here. This is more perfect. Now, you have gap ups and you have gap downs, right? This is a gap down, and it works the same way in reverse, obviously, gap up versus gap down. But it's where this was the 517. And you get this with good news, you get this with bad news. Or maybe 518. So right here, you know, they got, okay, there it is. So AGRX says FDA declined to approve its new drug application for hormonal contraceptive patch. Okay, so that's bad news for investors, people that are holding this stock. So what happens whenever you get bad news? It goes down. So this right here, this whole area here, where there's no trades taking place, right? This is the gap. Now, this works going the opposite way also. Stock gets good news, just flip this over in reverse, and it gaps up 50 cents or gaps up $1 or whatever it may be. It's a portion where it's price points where there were no trades taking place, which leaves it to where there may or may not be any support or resistance levels at that. So this is what we've been trading lately a lot in Atlas trading, because this is where the market has been taking us. You guys are looking at gap fillers. Okay, we had TTMP. This was one that I was harping on, and I know other people were harping on, just for the potential based on the volume. Let me get rid of all this stuff. Okay, so you've got 48, 49, 50, like right in this range here. This is where the gap fills. This is where it starts. And this is, if you guys are looking right here, you guys can see where I've got my cursor. I keep trying to point with my hands. But just look over in this section. You guys can see where the price is if you guys are new to Thinkorswim. So right over this like 30 mark is kind of the where the gap starts. And with a gap, it has a potential based on not having any support or resistance levels. Like if it's a gap down and you see a stock that is going up and uptrending here, like we had seen over, let's look at the 5-day here. You can see where, you know, it hits the 30 mark. Where's that at? Right here. This was the key level. And on U stock, I can't buy stock under 30, but myself and multiple other traders in our room, they were alerting TTMP, you know, since it was down here. And, you know, I waited until it got to about this point and it broke over that 25 level with the amount of volume that it had on the day, and said, look, watch this, guys. If it goes to 30, I'm going to add. And so what I did was, you know, I put 30,000 shares on the line here, trying to get filled between under 31, basically, because you got to put on U stock, or you can't put a 30 in and expect to get filled. So you got to put like a 305 or 31 or 315. And I think I had like 31, 31, and 315 because I figured I'd get filled underneath. And if it broke over like really fast and got to 30, 30, I would end up going. But my thought process was once it hit that gap right here, that 30 level, there's going to be little to no resistance up here. And it did get resistance, obviously, here and there, but it pretty much traded exactly how I said it was going to do. I mean, we were going in our room and I'm telling you guys, it's at 27 cents, 26 cents. And I'm like, hey, it's as it's going up 26, 27.5, 28. I'm like, hey guys, it's starting to do its grind up towards 30, worth watching, but just be aware that 29 cents to 30 cents is a super heavy resistance level. But if it gets past that, it's going to go. And I even joked around saying, hey, watch me get filled right after it breaks 30, and I get filled at 31 and it drops to 27 or something, But what I was looking at was just trading intraday. And what ended up happening day one, I think it went to 35. Where is it at? Yeah, 35, multiple tests on here. Okay, so I got filled. I told guys, it's probably going to go up and then come right back down, but it needs to hold 29. 29 to 30 needs to hold. Reason for that is because going back to where the gap was, that was where the resistance was. And once it broke that resistance, I harp on this, guys. Old resistance becomes new support. If that new support breaks, then the trend changes with it, and it has that potential for a quick downtrend or just a downtrend over time. So, where'd it go? All right. So opened up, went right under 30, came back down. This would have been a great buy based on, going off of the other days. All right. So as we kept going up, kept approaching here, kept going. We broke 30. Went to 30, 32. I think we had 33 on the ask at one point, and then ended up coming right back down exactly where I said. Gotta zoom because it wasn't 28.84. All right, bottom of the candle. Oh my God, there we go. 29. All right, it says 29.02 over there, but it was 29. So that was where we had that initial resistance right at 29 to 30. So moving forward, let me zoom out here so I can figure out where the hell I'm at. Okay. Now, what I was saying in the room is based on the trend, based on the patterns that we've had with so many other 20-cent tickers that once they broke that 30 mark, once they, start into their gap, if it doesn't fill the first day, it will fill the second. I mean, this is, at least 75% of the time. Okay. So for me, it was worth the risk. I said, hey, I'm going to hold until we get to 40s. Now, what did I end up doing? Now, I ended up seeing it go 35, come back down, 35, come back down. And I was giving you guys screenshots as we were up here, right? And I think I was up with 30,000 shares. I think it was up like $1,300. My reason for that is because I was confident in this one, okay? And I kept sending you guys screenshots with nothing scaled out. What I ended up doing, it kept going up and down, up and down. I ended up scaling a portion off, and then it came back down right off that 30, which is where I said the support needed to be 29 to 30. Added some more shares, maintained my 30K. We kept going up, testing this 35. You got 1, 2, 3 just on the intraday, okay, before we even get into after hours. So yeah, I held overnight. I think my average at first was a 304, and then afterwards it ended up being a 313, so a little bit higher than I wanted, but I was fine with it because I knew the potential for it. So moving into the next day here, okay, we ended up going mid 40s, and I was watching the setup here. We had a nice consolidation period, and I ended up scaling half up here, and then it kind of bounced a little bit up and down, scaled another 25%, and then as we broke under, I got out. Now, watching it here, you guys, this was the I still got my my drawings up here, but we came down, we tried a little bit here to do a bit of an uptrend, but it ended up falling again. Now, this is a key point here. This was 35 and hit 35, bounced up just under 40, right? Came back down, touched 35 again. And if you guys were watching this intraday with me, I gave you guys a chart. I said, look, 35 is basically a double bottom at this time. Ended up getting like 130K bidder. I had loaded up, more shares on this as I was alerting it. And yeah, I mean, I think it ended up coming back down, trying to rip that bid out, and got down to 20K, and then ended up taking off from there. Back over to the 40s again. Now, I know a lot of you guys that probably watch this video or that are in the room probably held overnight. Now, I kind of cautioned against this. I didn't even look at the after hours, but yeah, I guess this was the reason why here. These pennies that are under 30 cents, under 50 cents, they don't go for like 3, 4, 5 days to 2 weeks. I mean, not without a catalyst. Okay, there's no catalyst on this one. Ended up running up, getting the volume. It filled most of the gap. If you guys remember from earlier in this video, the gap was right around 48 to 50. So getting to 45 and then falling back down, coming back up, and maintaining that lower high here. We kind of had a cup and handle, I guess, if you're looking at it, but this isn't a long time frame. So I mean, most people still view this as a 20-cent stock. It's way too risky for anyone to hold. And what I always tell people, just scale out. If you guys get in at bottom, we gave it to you guys mid 20s, low 20s, high 20s, and then a 30 break. Then to top it off, we give you guys this exact same ticker, day 2, right at this multi-bottom. You wait for the chart setups on these ones. So you get a multi-bottom, triple bottom, which turned into a multi-bottom before it ended up coming up. It was just an easy read on that one. Okay, the volume was still there. It was still in that consolidation period, and then finally broke out from there. So these are the things you guys got to look at. I know I kind of went off track there because I was talking about up gappers, and someone asked, "What's a gap?" Price increase, decrease. Okay. Okay, you're asking, is the volume down here, is it helpful? It is. But I mean, sometimes I switch over to this equivolume, which, yeah, I mean, if you're trading, by the minute, with a stock, I mean, pre-market going into open, it can sometimes be beneficial after it gets like that bounce here, where you see that big volume come in, and then you start seeing it go green, and kind of can read it here. But it is nice having it down here. So let's go back over to our candle trends here. Cannot figure out from that if volume is high or low. Well, I guess if I'm going to, I can go over this real quick. It takes like 30 seconds. Okay. What's the difference between this candle and this candle? If you guys look down, the width of the candle is the volume. The height of the candle is the open and the close. So right here, we're looking at, what is that, 30,000 volume, basically 27,000 volume. And then at open, we're looking at, that is 3 million? My God. Okay, yeah. So that's 3 million volume right on that first candle opening up. Well, this is a 5-minute candle, so now it makes more sense. So this is what you're looking at. I mean, if you're looking on the 1-minute chart, you can see the width here is going to be the relation to this. So the wider the candle, the higher the volume. And it's based off this. I mean, if this was in thousands, I mean, it would still be the same width. And then once you got in the millions, it would obviously just, keep going up. But that's basically, if you guys are using the equivolume, that's what that's for. I keep going to studies every single time. All right, so going back to the scanner. Okay, so building the watch list, we already kind of went over. You're looking at these different things here. You're looking at the volume. You were looking at the name of the ticker to see if it's one that is well known. You're looking at the float size. Now, you can also go into the social media side and see, okay, what are people saying about that? But, a lot of people that are on StockTwits are, well, I really don't have to say it. Someone says, I'm holding, this 20-cent stock till we get to $10. It's going to happen. I'm like, well, it's going to be a reverse split. That's the only way you're going to get to $10 with it. But, some people are like that. Rob, have you thought about doing some live trading using voice channel? I know you do a recap a few times during the day. I have thought about it, but there could be some issues with that. just looking at, you know, if, because I'm not an investment analyst, I'm just a regular trader that somehow, some way has lucked out and gotten to the point where I am, where I'm able to read these patterns and see these things unfolding and know what may or may not happen next. So I'm not the guy that can go say, hey, go buy this, guys. And if I do a live stream and you guys are seeing me pull up, TTMP, and you see me purchasing it, I'm going to have a lot of people that are just going to buy that without actually learning the reasons why. So what I do is I talk about stocks in the morning during pre-market, usually around 9:15, we'll say 9:10 to 9:30, leading up in there. I'll jump on voice if I see some solid stuff happening, and we'll have other people that build watch lists, and if I see other people with a watch list and they are basically the exact same thing I'm looking at, I'm not going to go double down and say the same thing they are, but I tend to just stick with talking people through stuff and then going to the so I could talk through this right here and tell you guys like, hey, it needs to break over this level here. Pre-market high was 44, so if it gets past 44 with volume and maintains, it could go to the next leg, which would be that 48 to 50 if it breaks that. So I'll talk you guys through that. But a lot of times I'd open, for those that are on voice, I always say watch for a dip buy. TTMP was a gap filler, so obviously it fell down beforehand. But if you guys are looking, in the last 15 minutes of trading, I kind of tend to like, I don't know if I'm going to have it. I don't have a stock to look up, but just go off my mouse here, okay? And bear with me that I don't have a chart to pull up. These kind of trades right here, there's two different types of things that happen at open that, I like specifically. I like whenever you have, a nice run up here right at open. This was 9 o'clock, I'm assuming. Yeah, you guys can look right up in here. You guys can see the month, day, year, and time. So you guys can see right here, we kind of based off 38, broke 40, came up. But right at 9 o'clock, as you guys can see right here, 9 o'clock, Robinhood traders come on. There's a whole bunch of, momentum that comes in here. Some volume also starts to spike. So two things that happen, they spike up and that makes the new resistance point right here. And then as it comes down, retest this previous level, and then it opens at that level. There's two things that are going to happen. And I joke around, I say this, stock's either going to go up or it's going to go down. But whenever you have something that right at market open for Robinhood traders goes up, you can see that there's actual interest in this stock. So as it comes down and kind of consolidates at this level, starts to jump up a little bit from this level, wait for that sell-off is what I always tell people. But with these types of trades that go up, come back down to that previous level right here, they do have that tendency to go right back up to that level and test it right at open. Now, there's risk involved, especially with a stock that on the 5-day was in the 20s. But that's one type of stock. Now, the other one, or one type of thing that happens in the morning. Now, the other one is where you have this part right here leading up to right here. So in the last 15 minutes. So let's just look at 9 o'clock to 9:30 in 15-minute increments. So in the first 15 minutes, you can see it spike up, come back down. That's one way to trade at open based off what I just said. The other way is where at 9 o'clock, nothing really happens. It kind of goes up and down. And then you get to 9:15 and then it spikes up. So let's say that this was a spike up, right? A lot of those times you get that dip right after that spike. And those are the dips I look for. So just like how this one spiked up, came back down to this pre-move level, I don't like trading in that first minute or two of, we'll say the first 5 minutes maybe, but first minute or two, I don't like trading on something that is already going up. I just don't do it because more times than not, it's going to come right back down to like this point right here. And then you're sitting there, you're buying up right here on this candle. You see this volume comes in right here and you're like, oh man, this thing's going to run. It goes up, tests right here. You could have scaled for, you could have even sold your full position for 1 penny when you saw that, it tried breaking this resistance. And, I know price action and volume comes in and, in the moment you kind of like, oh man, it's going to break. It's going to do it. People want to do this. They're saying it's going to 50. or whatever it is. But just be aware, right in that first couple minutes, guys, shit likes to fall. So in this case, you know, getting in down here, you would have been fine to sell right up here once it started getting weak. But as we were saying in the room, don't buy up here. I mean, we were giving it to you the day before, but this is just talking about whatever. Is consolidate the same thing as support? No. Okay, so consolidation. I like consolidation on high volume points. So right here, I'm sorry, I'm only going over TTMP right now. Well, this is more of just a chart setup rather than a consolidation, but this period right here, this is what I'm looking at as like kind of a consolidation. If you guys are looking at the volume here, we'll do same level. All right, so, and there's a textbook definition for consolidation, but if I'm strictly looking at intraday trading and by the minute or whatever it may be, I'm looking at chart setup here where you got a double bottom, boom, and boom, and I'm looking at this to kind of build that base. Now, the volume that was coming in here at the time was, you know, 100,000, 200,000. I mean, it was kind of up and down, but it was really trading. There was, you know, back and forth buying pressure and selling pressure off of a double bottom. It does leave that potential for it to break under, but here's the thing. We had, it was between 35 and 36. I think the ask at one point was like 353 to 359, right in that range. So if you're looking there and you run a tight mental stop loss based off this double bottom and utilizing this gold line at 35 as your support, and if it broke that support, okay, this would be the test. If it broke that support and went anywhere like 34.9, I don't care if it's 34.99, I'm looking to get out right at that point because it's breaking under this gold line right here. So this is what I'm looking at, I guess. But as far as consolidation, you can see that between that 35 and that 365 level is where it was kind of building that consolidation. The volume was coming in with the buying pressure and the selling pressure. And this is what I'm looking at. It's like a consolidation period. So ended up coming up, came right back down, retested at 35, came right back up, went up to 38. And then this was the big level. Hold on, I just missed my spot. Okay, so I'm just going to take it to right here. So after 35, tested to 389. So what I'm looking at is this 389 level is going to be, we'll say 39 to 40 is going to be the key resistance break that it needs to have happen in order for me to stay on. So as we know, I mean, I got in right under 36 with like a 3.5. I don't even remember my average. I'll say 3.57 or something. So once we ended up going, kept testing, like we ended up with the triple bottom at this point in time. Then we finally broke over, you know, some of the resistance points, and you can see right here we are getting a higher low, similar to what we had happen here. So I mean, if you guys were just scalping a bounce, you know, 1, 2, 3, 4, 5 candles here, and then you can see right here there's potential for it to bounce. But this is what I want to look at. Boom, boom. All right, well, this one isn't gonna fucking, it's not gonna work. Okay, look. Oh my God, this is killing me. All right, so as we're going off this 35 level, we finally start coming up. Zoom back out, put that 39 in right here. You guys can already see if you're looking. I gotta get rid of this one, hold on. Trying to get the top of this one perfectly. All right, and you guys are seeing right here, it's 3894 is where that was at. So just looking at this, trading it on the intraday, telling you guys, hey, 35 needs to hold. Resistance going to be up here. I think I said at like 39 or 40. But you can see that after we had that bounce, it came right up to 39. Ended up coming right back down to 35, bounced again, 35, finally started going, got that higher low, higher than the 35. It was right at 36. So once 36 started to hold, and we're kind of approaching in right here, this is where we finally got that uptrend that we were waiting on. And just, oh man. Okay, so here's the line. You guys can see right here, we're getting that resistance right here that I was talking about. And this is where you guys can just see this stuff unfold and the potential for it before. I mean, how much time is this? Okay, so you're looking at it right here. I called it right here, I think is where I called it at, if I remember. Probably like right in this range here, 357, somewhere around there. So this is where we alerted in the room, or I alerted in the room. TTMP, already made my money on it. So for me, it is what it is. But based on the chart, we have a double bottom formed. We have a nice consolidation period here with high volume. As long as 35 holds, I'm going to sit on it. And I think I gave out the 39 resistance level, which ended up, I mean, this is easy. If you guys watched the video that we had 2 weeks ago, it's just like pre-market. You can set up your chart and you can actually draw these lines, or you can just remember them, whatever it may be, and know where a stock needs to get past in order to go to that next leg. Now, here's the big thing. Now, I talked about old resistance becomes new support. You can even look at old support becomes new resistance. So it's a vice versa kind of thing. So looking at here, here's the, you get the bounce, here's resistance, came back down, consolidated. Now we break over this resistance level here, right? Run up to 41, and it didn't quite hold it completely. But if you guys were down in this range right here and you were scaling out on these pops, which I always suggest anytime that you get a break over this 40 range right here, or 50 or $1, scale some profits. Like you get that quick rush of FOMO where people are buying in, and whether or not it's going to hold is going to be up to the market, and no one really knows whether it's going to go continue on from here, or if it's going to pull back, or what it's going to do. You can kind of guess on most of these things and speculate your positions, but I always suggest scale out. And also that was from, we'll say you got in at 36, right? And you get 40. I mean, you're already looking at just over 10%, which is where I always say start scaling. Now you get that mixed with a resistance break and a whole number break, 40. I mean, you just have that perfect, chance for, more than 10% on your first scale. So as we break over, you kind of look at it right here on this point here, held 385, broke right back up over the resistance, kind of small consolidation period. And don't judge me on textbook, because I understand what the textbook is on. I'm going off of the terms that I use, or the terms I use. So ended up breaking up, going up towards an uptrend here. And you can see again, this is where it started to test this 39 again, to try testing again a little bit higher, but you can see that we're getting the lower lows here. This would have been the signal if you guys were still holding, hoping for 50 to get out. Anyways, ended up coming right back down, testing 36, which was still a higher low from here. But if you were holding from 36 and you didn't scale anything, you were wrong. So sorry about going over this ticker as much as I had, but we can jump into patterns, I guess, while I'm talking about this. So we've seen this before with all the other pennies that end up going. You look for patterns in the market, and right now, patterns and trends. We've got China, got a ton of momentum this week. So obviously, China stocks were on watch, and then on top of that, we had SPY CPHI that we were calling out this week. So let's go to CPHI, because this is one I was actually extremely mad about, because UStock, in all its glory, does not allow you to buy shares in limited liquidity stocks. And by that, it means that there's no shares available, which makes no sense, because nobody can buy a stock that is under 30 cents on UStock. So as soon as it breaks 30, you should be able to buy, respectively, you would think, right? But you can't. So this was one where down here, right at 25 to 27, we were alerting it over voice, CPHI, watch it at 30 break. I'm going to try and add at the 30 break. Market trends, it's China. right? China, pharma. This was a perfect setup, okay, because we had pharmaceuticals going with PTI. And we had China stocks going with, Yecco, NCTY, CCCL, all these different tickers going. So this was a perfect storm. And then on top of that, the previous trend that is still in effect was these sub 50-cent stocks filling gaps and going up. CPHI was perfect. Okay. And I missed it. This 84 from 30 break was where I was going to get in, or wherever 30 is. Okay. So, anyways, we ended up breaking 30. And all in this range here, okay, between 30 and 35, I was not able to fill. Not able to fill. I stopped trying after 33. I was like, whatever, it's going to go, but I'm going to miss out on it. So I stopped talking about it completely. The only time I was talking about it was like, oh, wow, CPHI, how awesome that it's now in the 40s. Oh, wow, now it's in the 50s. Wow, 70s, 84 high. Wow, congrats to all the people that were able to get it on the call under 30. Yeah, this happens. I mean, it's UStock. I could easily just jump right over to TDA or, one of the other brokers and do that. But yeah, I'm stubborn and stuck in my ways. So anyways, CPHI, we've had, if you guys are looking at it, what was I talking about? Patterns, right? Patterns and trends. Now, you are not going to see a move like this every day. Okay, unless it's shipper season, which we'll talk about in a minute. This doesn't happen all the time, but this 30 level, okay, this right here on a lot of these tickers, CPHI, TTNP, which we just talked about, and SPY, I think was the other one. Yeah, so SPY I was able to get that day. This was another one. I was like, well, I'm a CPHI, but this one's setting up here. We had a couple days of volume here, and then we finally started getting up here, and this right here is what I was wanting to get at right there. Calling it out. And this is is this my 1 minute chart? No, this is my 5 minute chart. So it starts coming up. It's 28, 29. You guys got this candle right here where it tested 30 and came right back down. So we know 30 is going to be a resistance level just based on a 5 minute candle right there. So as we get another one coming up here and we finally break, it was the exact same setup, guys. Okay. I mean, there's another China, I think China Energy, if I remember. Yeah. Okay. Anyways, yeah. SPY China. So anyways, just looking at it, I mean, was not going to get the same momentum and volume that CPHI did, but figured we could easily go to 40s. Okay. So I said, watch this at 30, because this was another one I was talking about, over voice, over, text, over all these different things. Finally broke. I was able to actually fill on this one and make a good profit on it. I think with this one, I probably could have gotten more than what I did get for it, but I still ended up with a really nice trade. And here's the other thing on these. Okay. You got a stock that was on the 5 day, and always look at the 5 day or the historical charts. Look at this. This is what people see. You see how this is highlighted right here, 26 cents. And you go to the 1 day, it should be highlighted also. Low of 28, high of 35. This is what people look at. So let's say this stock is right here at 32. I mean, 3 cents away, 10% away from here, and more so from the bottom. I mean, people are looking at these highlighted things. You got to look at trader psychology on this, okay? So whenever you're seeing a stock at 45 cents, who's going to buy a 45-cent price on a ticker that literally was just 26 cents and doesn't have like a huge catalyst? Okay, so this is the kind of stuff that you want to look at. And I see a lot of the traders, and not so much in our room, but I do see it happen, people buying on a 40 break after a stock broke from 26, 27, 28. That's the wrong thing, guys, because a lot of times they break, they run, they get that volume, they saw what happened with CPHI. Don't get that hope and that wishful thinking that, oh man, this thing's going to go to 80 cents just like that one did, and then end up buying right up here at the top somewhere, right? Anywhere over this part right here. So don't get burned. And this is what we want to stress, especially in the room and everywhere else we go. Like, there's trades that I take that, a couple minutes after they're done, I think, what was the one I had yesterday or a couple days ago? I was in CCCL. I ended up buying after it, I think it halted down, and I was looking at it. I charted it out that I wanted to get at, I think, 380. I think it was 380. I ended up taking it, and then it I'll answer that question in a second there. Technical indicator on your chart, yellow, green, and red. It's a VWAP. Yeah, this is basically, I keep the gold one. That's the one that I go by. But sometimes if I see a stock that I don't know where it just dumps down here, I mean, it could potentially, bounce off that. I've seen it before, but it's not as accurate on the red or the green. But anyways, I go off the gold indicator here. That's VWAP. So where was I at, guys? I think I was talking about trading on hope, trading on emotion. It's the wrong thing to do. Like, trade technically, fundamentally. Just trade based on, you got real money in this, and you could take real losses, you could get real gains. So I've seen people that, buy down here at 30 cents on a stock. They get the break, it runs up 45, and they're like, oh, I'm still all in, and then it tanks, and they sit here not wanting to sell at 32, obviously, because they're in at 30. Gets the bounce, gives them another opportunity to potentially just scale out, because obviously if it goes to 45 down to 32, that's probably bearish in my opinion. And then they're probably still holding here thinking, oh, it's going to bounce again. There is potential for it, but wouldn't it have been easier if you got the 30 break, sold at 42, 43, 44, scaled out up there, or scaled at 36, scaled at the 40 break, we're 41, and then somehow, some way got some off right here at 44, and the rest down here as we started to get weak in this part right here. So wouldn't it be safer to say that you need to take your wins where you can get them? I mean, if you can get 10% on a trade, that is a good trade. Okay, so this is obviously way more than 10%. We have a lot of these, throughout the week that we call in the room. But you get that trade on hope. People buy here, they see 45, they see it come down, see it come right back down. Oh, it's holding 30, it's going to go. You just missed out on so much gains right here. You missed out on, what's that, 15 cents? That's 50% from 30. 50% is a freaking huge win for anybody. So that's what you guys got to look at. Take your wins where you can, leave a core position here, and then if it starts coming back down, if you got after hours and pre-market access, maybe hold on to it. But at this point in time, look into your 5-day, your 10-day, and you see that 26, and you're like, okay, there's potential for it to hold 30, but who knows? What's the trend going to be next week? Who knows? So make sure you guys are scaling out as you go up. All right, so what else we got? We've talked about the up gapper. We talked about some pattern recognition, the patterns that we've had between China. We just follow the patterns. I mean, I've seen this time in and time out where it's beat up, gap down, bio pennies under 50 cents. That's where you're getting, millions of volume and hundreds of thousands of volume, and it's only 9:30, 10 o'clock, 10:30. That's where all the volume is. And then, people are like, hey, I'm jumping into this oil stock, because this other oil stock went up, 40 cents. Yeah. And this was, I'm not going to call out anybody by name. I don't remember anyone's name. I just want to make a point that just because something else moved up 40 cents, 50 cents, yeah, you may get sympathy, but stick where the volume is. Like, if the volume's here in the pennies, or if it's in China, or if it's in shippers, or whatever it may be, that needs to be your strategy for the day. Okay. And just stick with that strategy, regardless whatever everything else is going, because everybody else is looking at these type of trends. They're not looking for the new trend on the day. If you got China running and it's day 2, and you've got a move like this right here. Okay, Yulong Echo Materials Limited. It's China. Okay, other Chinese low float stock skyrockets prior to halt. Then why would you jump onto anything else if gains like this are being made? And you look at other ones, 130 to 645. Stick where the volume is. Okay, notice these patterns and jump on them. Okay, there was so many things going off. I think on one day we ended up with PTI was running. Okay, another dollar something stock that multiple people in our room called, and run up to 11. And this is just on the week, and every single week. I mean, if any of you guys are not in our Discord, like, I need to put up the link here. Check my other video; it has a link in there. So Sorry, I just looked at the thing and someone's asking about level 2 data. Wait, hold on. All right, give me a second. I'm going to go over the live chat in a second. So stick with the trend, notice the patterns. And I think I had actually, because I've been burned by China Momo in the past. Last year, it was like one day where I got burned. And I was like, okay, you know, I don't trust China momentum 100%. So even though I see, you know, PTI and Yeko and CC, or no, not PTI, but I see CCCL and Yeko and some of these, you know, running up, just going insane. I kind of stuck with the bio trend for the first like 20 minutes of the day and then said, okay, you know, bio is not actually getting it. So this day, I think I went down like $500 to $800 in the first like 10 minutes or 15 minutes of trading. And I was like, okay, well, bios are not actually getting the volume. Started looking at the Chinese stocks, started playing the Chinese stocks, and that's where we ended up with CPHI being called out at 27 cents. And that's where we ended up with SPY being called out at this same exact range, 28 cents. And with both of them, I said either wait for the 30 break or get in, get in at that point. But you know, it'd probably be better to wait for 30 just so you know that it's breaking through that resistance. So yeah, that's going over the patterns. Let's go through some of the live chat on here. Can you describe how you read level 2 data? I've heard you guys talking about a lot of bids on a particular stock, but when I look, I see both things happening: bids and ask. Okay, so I think I understand what you're saying. All right, so we're looking at. Oh, let me see if I can find a good one here. All right, so if we're looking at level 2 data, this is D6. It's a shipper, which we will talk about soon. Looking at your bids right here, okay? At 130, this 10 equals 1,000 shares, and the 5 equals 500 shares. Basically, just add 2 zeros on this. So if we're looking at some of these stocks, and you're looking in relation to a chart setup like Boom, it's not really clean. But if you're looking at it in relation to, you know, some type of chart setup, say you got an ascending triangle, for instance, okay? See if I can find an ascending triangle. That way I can actually make my point a lot easier. It's got me descending. All right, so anyways, yeah, I could probably move way too fast to have any. All right, well, whatever it is, okay. So let me go back over to D6 and I'm getting taken way too long on this. All right, so we've got D6 and you're looking, let's say that it's going for some type of resistance break. Let's say it's right here, okay? We got multiple tops and this is the 5-minute charts, 5-minute candles. And let's say that it finally started to move up. I'm just going to draw this. All right, so you got your top there. There. This is not exactly an ascending triangle, so forgive me on this. We're going to act like this candle right here is not closed down here or open down here. We're going to act like it's just right up here, just for the purpose of this video. So here's what we like. And this is where we come in and say, hey, there's bidders here. Now, the bid support does not affect price action. It can sometimes impact it, but it is not a guaranteed like, oh, this thing's got 200,000 on the bid side. So it's not going to sell through. People want to buy in and this and that. Like, it's not guaranteed. Like we've seen, you know, 1 million shares right here get ripped in a matter of 15 seconds, 10, 15 seconds, even less than that sometimes. So you can't always go off bids, but it's just one of the other indicators or factors that we kind of look for to show that there may be an interest in there, but you got to watch out because sometimes they're fake bids. But let's say that, you know, we had that stock right here, closed down here, finally started like creeping up and following this little uptrend here with a flat top right here. And God, it's so hard whenever I don't have an actual ascending triangle to really look at. And let's say we get to this point right here, right next to that resistance break, and it's got down here on your level 2, let's say that it's got a 100,000 bidder versus a 500 wall. This is where we say, hey, bidders are stepping in when we're talking about the level 2, because a lot of people are trying to actually push this price up, or they're trying to get in at that price. So that's the only time that we ever really talk about, bid support and that. Outside of that, if we're looking at, I'll keep this one up. Let's look at, no, not this one. Damn, it was so much easier a few months ago, because everything was like riding a perfect channel off 30 cents at the beginning of the year. But no, if we're looking at some of these that, let's say that it goes up. Oh, no, I got one. I think. Where was it? Okay, so let's take just this section here, okay? And you guys can see that it kind of rides a channel here, right? A little bit of a wave. Well, this is more of a shorter time frame, but let's say that it just goes up, goes down, goes up, goes down, goes up, goes down, kind of right off this level here. Okay, I think this was an algo-driven stock for the most part. And boom, we'll just say to boom. So you got goes up, goes down, goes up. Sorry, I keep repeating myself. Down. This is fun. I love drawing. Okay, so here would be another good example of where bid support and level 2 could actually help. Let's say right here off on this 52 level, 53 level, where it keeps going bouncing from, right? And not perfectly every time, as you guys can see right here. But basically from 52 to 53 has been a pretty solid channel, from 52 to 53 up to 58, right? And I was trading this on during this time frame, but I don't think I got in until we finally cut back down right here, and I got in, I think, twice. Yeah, I got in twice. So just looking at this, let's say that, for instance, right at this 53 level, there was a 100K bidder. I would feel so much more confident about buying in and going in larger here, because it is bouncing in this channel. And vice versa, let's say that there is a 100K wall up here. This would be a resistance level that would have to break, and this is why it's not breaking. So it keeps going up and down. So that's where the level 2 could actually come in handy, right down here. And obviously, situation is going to dictate on all of these, and they're not all going to be the same. It's not going to be some perfect channel, or sometimes you do if you're looking at, like a 3 to 5 day swing. All right, so let's go back to it. Yeah. We called FLKS Kiwi. Like, honestly, I mean, if you guys are looking at any and all of these tickers that ran over $1, we have called every single one of them. Whether it was me, whether it was Ultra, whether it was Static or Alfie, or Paint, or Stock Authority. I mean, all the people that we have in the room. And I don't want to say talent, because I don't want to come off like I'm blowing smoke up my own ass, but all the talent that we have in the room and the knowledge pool that we have. I mean, I don't think there's been a single one that went from, under our nose without us knowing. Like, there's been one that we call days before, noticing market trends, noticing patterns. And this is what I really want to harp on, guys. Each week, like, take screenshots of stuff, like take notes, look at where these stocks are going up and down and why they're moving and which ones are running sympathies, and put that in your memory bank and remember that shit, because it's going to come in handy a month down the road. It's going to come in handy a year down the road. It's going to come in handy the same day or the next day. So use your brains on this and do everything you can to try and find patterns and understand why these stocks move. Because I'm telling you guys, like, it takes time to become, solid. on this. It really does. A lot of people, they start out with the trades and they jump up, 20% of their account in like a day or two. And they're like, oh my God, this is so easy. And then they have that period where they end up downtrending. And then finally, failure, they learn from it. And then they start to bring their account right back up, a couple bounces, then finally start to progress. But if you don't want to take, 6 months before you, let's say it's your 6 month trading, right? And you haven't quite yet been able to come up with your own trades and your own strategy and your own plan, and you're just dwindling down your account little by little with little spikes that give you that hope, and then coming right back down, and then spike again, coming back down, and just take that evaluation of yourself. Look deep into what your trades and why you took them, and whether it was you chasing a call that somebody made and then it jumped up 2 cents. You're like, oh man, this is awesome. Dropped 10 cents. You sold, and then 2 hours later ends up running, 50%. Whatever it may be, come up with your own strategy. Find something that works for you, even if it only increases your account 1% a day, or 5% a week or 2% a week. If that works, stick with it. And while you're doing that, learn more about it, and then learn more about different strategies. But find something that works for you. Find your niche or whatever the hell it's called. I don't know what it's called. Find whatever works for you, and then roll with it. I mean, that's simple advice, but it comes in handy. Okay. I honestly didn't learn from my gains. I learned from my failures. Just like anything in life, you learn from failing more than anything else. So anyways, all right, let's keep going down. All right, can you take me through your thought process on CNET just before the start of day and right at the start on Friday? So I'm assuming you want me to go over CNET on Friday, right? All right, now you're talking about before open, right here. Similar to what I did for TTMP. All right, so I'm not going to start right here. Okay, we know why CNET was going. We know why CCL was going. We know why TAOP and some of the other ones were going, FTFT, Craig, whatever it may be. It's China, okay? So what you guys need to know with some of these market trends, they don't last forever. They don't always pan out. They don't always play out properly. Just because one goes does not mean that stock XYZ, the same sector, same exact thing that works next door, their building is next door to that one, does not mean exclusively that it is going to go in sympathy or that it will go. So when you've got something like Yeko that has a nice solid move, and then another move, and then another move after a dip, they will downtrend. Yeko, they're not all like RKDA and some of these other ones run to 66. Now, understanding that stocks don't run for weeks and weeks and weeks and weeks and weeks and years. Some do, but it's very rare. They run for a day, or they run for 2 days or 3 days, sometimes a week. So knowing this, whenever you're looking at CNET off of Yeko, off of CCCL, you've got a little bit of action here. Okay, that's kind of that little indicator that something may happen soon. And then you see where Yeko ended up bringing up. I don't have this chart side by side right now, but if I did, you could see that Yeko finally took off, and then this got that huge sympathy, and then a huge dump right afterwards. So based off of this 176 to 293, and then dumped right back down to 180s, that probably could have been a good indicator to buy at that point in time as a speculative entry to go towards a potential day 3 based on Yeko. Okay, so going into Friday, which is right here, all right, you are looking at your pre-market. Okay, kind of a little bit of a grind up, nice volume comes in, we pop up, come right back down, still maintaining that higher low as we go up to boom, boom. And then right here, we kind of go a little bit sideways, but this is, remember that 30 minutes that I was talking about? This is 9 o'clock, right? 9 o'clock, it gets that nice grind up the whole way and then dumps right here. And this is perfect because earlier I was talking about the two types that I like that go up here and then the last 15 minutes grind right back down to that same level and then go up, right? This is the vice versa of that, where stock runs up a little bit, keeps going up, and then pops right before open. And then that last little 5 minutes, 3 minutes of trading ends up going down and looking bearish. And then you get that dip buy potential. Now, looking at this one, the first 15 minutes are always tough, but this one ended up taking a while. I mean, look at all these red candles that were happening as we go down. So if we're just looking at this, let's go back a little bit here. See this bottom here. And this one's always tough because this is like day 2 or day 3 of a move. So, I mean, it's not, you don't have that full support line, okay? Because this is where people are looking at. This was $1.50. So going into it right here, trying to guess that 253 is going to be the next point where it starts reversing is it's almost impossible to tell for sure. You can guess, but your risk is so much higher on day 2, day 3, day 4. Whoops. So you can kind of see that there's consolidation, but there's no clear indicator that this is where it's going to reverse unless there is. It's 236, 235. Yeah, scrolling all the way back. I mean, I would want to know where there was a resistance point at 250, where was some kind of indicator that was going to tell me that at 250 it was going to go. And there's none. Or at 250 is where it was going to bounce, because that's where we had the bottom of the candle here, right in the 250s. So at that point in time, it would have had to have been, watching it minute by minute, second by second, and seeing, okay, this might start to uptrend here, might start to turn around. But so yeah, just be aware that if it's on day 1, it's a lot easier to read. But after that, day 2, day 3, day 4, it's up to the market. And, stock goes to 426. Gecko's rocketing past 14, 15, 16, 17 bucks now. And this one can still just tank down right back down to that $1 level that it was at. And I think whenever we were talking about Gecko, I'd actually said watch for it to, I don't even know if I talked about it. Like, I don't like talking about stocks that are just up like this and that in a matter of a minute go into one halt on the way up and then they open up and within 30 seconds they're halting on the way down. I don't want people to jump into those stocks that are super high risk where you have, right here, 10 bucks to 17 bucks. Yeah, that's great right in the beginning. But then someone buys in at 15 and it goes to 17 in a matter of like a minute or two. They don't know to sell. And then it tanks on them, and they're right down here at 8 bucks. So we don't like to really trade. And we have people in the room that give you the scale points, that give you the resistance points, the support points, and those ones are good. And I could tell you guys on some of these, like, hey, I'm adding here, support here, potentially if it falls under this point, my risk off at if it falls under 8 bucks or whatever it may be. But the problem with it is that my entry could be, 8.15 and it's 8.30 on the ask, like within 5 seconds. And so it's like with these ones that are up and down 50 cents really quickly, I mean, it's not ones that I want to talk to everybody about and have them jump in on or any of that stuff there. All right, so let's go to CCCL, and I'll kind of talk you guys through a trade that I had. I feel like it was Friday. Yeah, it was Friday. Where was it at? Okay, so anyways, I'll just talk it through, okay? Because I don't know time of day that I got in on it. It's somewhere in there. I screenshotted, like I added like 1,500 shares. I didn't go large on it just because it was riskier. And it wasn't day 1. It was just getting that momentum and it was halting. So anyways, CCCL halted, opened up, halted, opened up, came right back down, right? So think where I was at, it was 280. where was it? Yeah, it was right here. Okay, so this is right where I added at. I didn't add on this halt here. It halted, right? Then ends up jumping up to 3 something, and I said, okay, well, the halt started at 280. If I can get back in at 280, I might jump in. And this is just one way to trade. This is without going over VWAP, but this is just how I was looking at the chart at the time. I ended up getting in 280 and sold like 330s or 430s. Maybe this wasn't in, and I got in at 380. I don't know. Okay, I don't remember where I got in, guys. Like, I trade a lot. So, but just looking at some indicators you guys want to look at. Okay, coming out of a halt. Let's say right when it first starts. Let's go back. Okay, so right here, starting out, market opens 240, right? Ends up going up, down. Hold on. Okay, gotta get a price right here. So some of the indicators to look at, or the EMAs, looking at VWAP, and this is a 5-minute chart, so it's kind of spread out. But if you guys are looking at the 1 day, 1 minute, you can kind of see it whenever stock jumps out of a halt. Let's say that this was a halt right here, okay? So let's say right out of the gate, it goes from 235, right? And then out of nowhere, just jumps up to $3 and halts, right? Let's say your VWAP is at 270. Okay, from the $3 is where it halts. Out of the halt, ends up jumping up to 340, comes right back down. VWAP moved up to 305. Use VWAP as an indicator. Use your EMAs as an indicator. And you really got to look at, I wish I would have highlighted where these stocks halted at. That way I could actually use this as a reference today. But yeah, trading out of the halt, you're given a 5 to 10 minute window, sometimes more, to chart everything out and know where you want to buy. Now, stock comes out of a halt. Don't expect that as soon as it comes out, it's going to go right up here is where it's going to open up at. Don't buy up here. Let the stock settle, okay? Now, we've seen this, especially about this time last year, where the volume was back in the market and people were buying, people were holding longer. Stocks wouldn't just run to one halt. They'd go to like 5 halts on the way up before they started coming back down. We aren't there yet. And so you've got to adapt your trading style. What we've been used to over the summer is a stock not going to a second halt. It halts up and then it halts down, and then people are screwed. So trading a halt going into shipper season, going into, you know, the fall season here, where volume is actually going to start coming back in the market, as we've seen over the last month, you're going to see it halt, and you'll see some of them that'll go right to the next halt. But if it does, it does. Okay, the ad would have been down here. So let it halt up. Use your indicators, your technical indicators like VWAP, your EMAs, your CCI, RSI, whatever it may be, and wait for a dip, okay? And then it's risky, okay? And the thing you guys got to understand, especially with reverse splits or any low float that actually runs into halts like this, they are extremely, extremely risky. So if you are new, don't trade them. Like, just don't do it unless you just don't care about money, because more often than not, it's going to open out of the halt. You're going to buy in off of VWAP and you're going to be up 30 cents on it real quick, right? I mean, this is really quick, easy money. I mean, if you guys were watching, like, I had 1,500 shares, I made like $700, like, easily. I mean, it was in a matter of, I mean, if you look at just a trading time, in a span of maybe 30 to 45 seconds of actual trading time. And so you can easily make money doing this, but at the same time, you could easily lose that much money. You could blow your account up in a matter of seconds, in a matter of minutes. So we'll talk about shippers and how they're going to end up being different, and how some market trends are different. But trading out of a regular halt, off good news, off of, you know, the volume that's coming into the market, you got to look at all these different things that are going on and see how things have been reacting to that kind of news before. Look at the historical charts on this to see, you know, where has it done this before. See different spikes, where the resistance points right here at 430, right there at 363. So getting past that, obviously, this is a yearly high. Okay, going back in the 3-year, there's still some room, but I don't generally like the 3-year. So trading out of a halt, guys. Just going off of 1 minute here, you know, they don't always halt here, halt there, and then stop up here. A lot of times they will halt and then they will dip. You can get that quick bounce, sell half your shares or whatever it may be, and hope that it doesn't go downtrend past that. Okay. It's basically the way to trade a halt is you get that initial pop. And this is obviously a longer time frame here. So just bear with me. Act like this is like 20-minute period in this little area here. So you get that pop, you get that drop, and then you get that bounce, sell some here. And if it holds here again, maybe add to your core position again, and then see if it uptrends. But if it starts breaking down, then just go ahead and get out. And this is like getting in after the halt, guys. Like if you're in before, there's multiple ways to trade him. Like let's say you got in right here, 275, and then out of nowhere it just starts going at halts. It's 321. You're like, oh my god, like I'm up so much right now. I'm up 50 cents on 1,000 shares. This is my biggest trade ever already. You know, going out of that halt takes them off. Whether it's 25%, 10%, 100%, 50%, takes them off because a lot of times coming out of a halt, it's going to have that quick pop. So what I always recommend is just put a limit sell in either below or above, and just kind of lock some gains in case it's up like 60 cents or something out of the halt. And that way you're up like $1.10 and you're like, oh my God, this is an amazing trade. So the way I normally do it is I scale out of the halt. I take some off and then it bounces. And if I see where, you know, it's a potential pivot point based off of, you know, a previous resistance, then I might add some more right there after scaling some right there. So let's say I've got 1,000 shares and it's up 50 cents. I take, you know, 250 bucks up right here, right? I take half off, comes back down. I average up if I feel like it has a possibility or potential to uptrend. And then I'm running instead of a 270, I average up at 305. Let's say I've got like a 290 average now. So now I can basically say, okay, if it starts looking weak at $3, then I jump out. I still make 10 cents on my average with my full position. And if it uptrends, I still have made the 250 here and then have that potential for more if it goes up. And then scale out again. Okay. And if we run into another halt, if it's the second halt, I will scale some into the halt. If I see it about to go into a halt, I'm going to take some shares off right there. And then third halt, same thing. And we'd have to look at Yeko for you guys to see actual multiple halts. But that's basically how to trade a halt. Just kind of like use your technical indicators, like your VWAP, your EMA, CCI, RSI, like I said. And then also use the previous resistance or pivot points or where it halted. Or if it jumps up, you know, from $2, goes into a halt at 240 and then opens up at like 320. Dude, if it falls back to like 260, you might potentially have, you know, just look at percentage changes. I mean, there's so many different ways to trade out of a halt. I mean, without doing it real time and showing you like a video clip, it's going to be almost impossible for me to really, really specify and tell you this is how to do it. All right, I'm extremely new to trading stock market. Do you think learning support and resistance is a good first thing to study? If not, what should I focus on first and what should I work on after that? Okay, so let's say you're new to trading, okay? Best advice I can give you is to watch YouTube video after YouTube video after YouTube video. In our Discord, we have an educational section that is probably way more than you will ever need. But learn the lingo, basically. Okay, that's one thing. Start learning what VWAP is and CCI and RSI and all these different things that people use, you know, low float, MOMO, FOMO. So learn those, I guess, the verbiage of trading. So you actually know what people are saying whenever they're talking about it. Support and resistance, yeah, I guess that you could learn about that. That kind of comes with time. I'd say set up a paper trading account and start paper trading. Start asking questions to, you know, traders in different rooms and asking for advice and just literally, I mean, just watch videos. Like that's all I did. Like I still watch videos all the time on stock trading just in case there's something out, but you learn a whole bunch of different type of trading, whether it's swing trading, whether it's options, whether it's shorting, whether it's day trading, penny stocks, mid caps, large caps, whatever it may be. Learn everything about all these different sectors, right? And then find one that works for you, one that you're interested in, one that you think you could potentially be consistent in, and then try and master that specific type of trading. So if you start mastering that, then you can start moving on to other things. So, I've been day trading a while, and I've done swings, I've done day trading, I've done crypto. I even tried shorting recently, but I hadn't shorted ever. Like, it's years, and I just now started to try and short stocks whenever the market was bad. And I was pretty decent at it. I had some fails on there, but you just, what trading tools do you use? Let me go to my studies. 1 second. All right, so you guys can screenshot that. This is just the most basic day trading study that I have, and this is what I use like 9 times out of 10, unless I'm going to try and swing or do something like that. But I'm mainly consisting of day trades lately. All right, you have under 25K, so I think the best way for me is swing trading. I would agree. And I will also say that there are shippers that are about to blow up and could potentially make you a ton of money. And we'll talk about shippers here in a sec. So just look at the market trends. Like, learn market trends, research tickers. Whenever you see these stocks, what I want you to do, or what I would recommend that you do, is look at these ones that have the 2.3 mil, the half mil. Look at these ones, study these tickers each night after they've moved, and try and figure out why they're moving. Okay, so you can start learning those patterns. You can recognize that in the next one. So I say if you do that as a newer trader, it's going to set you apart, and it's going to set you up for future success. And it's basically just learning from the past is how you can improve your future. All right. So that'd be my recommendation. But yeah, here's my studies. You got your moving average, exponential, close 9, then no, and then you guys can just easily just screenshot this and then plug it in. But I've got my VWAP, I've got my EMAs. I like sticking with the 9 and the 13. I always say 8 and 13, but 9 and 13 moving averages, just for intraday. When I'm looking at the 1 minute, the 3 minute, or the 5 minute. And then VWAP, obviously. So, and MACD, I don't really use this. I do and I don't. Like, there was a point where I really felt like I could strictly just look right here and say, okay, you got a crossover here, so this is where a stock's going to go. I for a while, I really thought that I could foresee the future on stocks. Going off this was a long time ago. I keep it up here just as a reference point, but this is not, it's not 100%. There's no trading tool out there, whether it's RSI, MACD, CCI, VWAP, EMAs, SMAs. There's no one-way ticket to success with any of them. Okay, so you use technical indicators that you know how to read, that you can actually, God, my phone's blowing up. So use technical indicators as a basis for understanding. And then the rest of it comes from your previous failures and successes and what works and what doesn't work. But don't heavily rely or lean on one specific thing or two specific things. Have a culmination of many, many different things as far as studies go. I've got VWAP and I've got EMAs. That's really the 95% of the time, that's what I'm looking at. Just as reference points if I'm trading to the minute on stocks. All right, what kind of moving average do you use? I use 9 and 13 EMA. All right, so let's go over shippers real quick, okay? We'll go over last year's big winner. We got to pull up the 1-year chart. And if you guys are new to trading, which I feel that a lot of the people that are going to be in this video are actually relatively new, look at this right here. This was not a $3, under $3 right here, $2 to 28.5 in a matter of, this is 1, 2, 3 days. Like, this is ridiculous, right? Like, I trying to like build up a suspense here, okay? Now, dries. I look at the 3-year on this one. Okay, this was not right. Where are we at? Gotta go to 2016. Go on. All right, so this was another one. Oh my God, this is not accurate at all. Okay, great. So anyway, dries was the one that ran the year before. So we'll go back to D6 real quick. Just as a quick reference, and we've also got tops. Let's pull up this 1 year. Okay, for whatever reason, shippers like to run each year in November, okay? Now, what I have seen, and this is just my speculation, it doesn't mean go bet your house on the stock I'm going to say or any of the stocks that I say. This is not me telling you to do anything. This is just me giving speculation, okay? Now, each year in November, shippers run. And they don't just run for a day or an hour. They run for 3 days. So what I recommend to everybody is to start studying on different tickers, okay? Now, give me a second here. You guys can see on the left side here, right over here, I'm going to list off different tickers that I think are going to have big moves this year in a week or so. Tops is going to get action. But these probably would be my top 4. Maybe SCA. All right. So I'm going to talk about GLBS real quick. Okay. Let me pull this one up. Now, this was a reverse split, so let's just not judge these prices. We'll go to tops first. You guys can see tops was a big move. This is another reverse split. But basically what happened is tops went into a reverse split and then ended up running hard. And since then has always been kind of like one of the ones that moves anytime there's a shipper trend going on in the market. You know, crude oil's down, shippers are up, whatever it may be. The thing with crude oil price versus shippers is, let's say crude oil goes down and just goes down. The shippers are going to stay out and not turn it in because they want to. Okay. So you've got shippers out transporting oil, and whenever the oil price is down, they don't want to come back into port and sell for a loss. They want to actually wait until it comes back up and rebounds and actually make some money. So that's how sometimes they run sympathy off each other, whether one's up, one's down, or vice versa. So anyways, I'm not going to go in detail on that, but just looking at tops. Okay, tops did a reverse split, ran up a lot, and then came back down. So there is potential for this based on float size, although I think the float's a little bit higher now. So tops is one that is on watch, but I'm looking at GLBS. Someone else mentioned this in our Discord room last night, and I swear you guys literally read my mind on this. And I was like, oh, okay, well, I guess I'll talk about it. And I don't remember his name, but I was going to give him a shout out too. I don't remember him. But anyways, he had the same thought process I did, that tops was, reverse split last year. So GLBS could be also. So with GLBS, based off of tops last year, we can see that it is definitely getting some action. Now, one thing I am stressing here that could happen, because we've seen this in a lot of reverse splits. I'm not saying go out Monday and buy this stock. I'm not telling you guys to do anything. If you guys look past on the yearly charts on any of these shippers, you will see that there are pops in October, and then they flush right back down and then take off November 1st or November 14th or whatever it may be. So GLBS, I think, is going to be one of the top top 5 contenders, probably the top 3 contenders as far as which one is going to run over $20 this year if we have that shipper momentum and that shipper mania go on. So GLBS on watch, but we've seen a lot of these reverse splits end up getting offerings within, you know, a day or a week or whatever it may be. So be careful. Now, D6, I think, is going to be the second biggest runner. There's potential for it. I think it's got earnings coming up on the 30th. No, on the 15th now. Okay. Now, I'm saying D6 based on of Dries last year. Dries was a 2016 big mover. And whenever 2017 happened, D6 was a big mover. And Dries ended up getting like a whole bunch of movement based off of that also. So I think D6 has that potential to, you know, run up $6 or potentially more than that. And this is all up to the market, guys. So just be aware of this. Yeah, PXS is another one, which I'm really mad about, actually. Like, look at PXS, okay? We were talking about this. And I was like, I kind of want to just put, you know, 10,000 shares into every single stock. And, you know, looking at percentage, like 2 of them could get offerings and, you know, I could still just, oh my God, I could destroy the market with it. Like I would still make money. If you put money into every single one of the shippers, you could still make money. Even if you took losses on a lot of them. So what was I talking about? PXS. All right. So let's go to, damn it. We were talking about it right around here in this range. And then I think again here, we've talked about PXS a lot in the room. I'm contemplating buying my swing on it because I really kind of like the fact that it was under $1 and there's a lot of room for, you know, improvement on this, especially whenever shipper season comes up. And I could probably go to $2, if not more than that, or $1.50, you know. So what this has been doing, it's been just on a solid little consolidation here, and then an uptrend. And obviously the prices are, you know, fluctuating here. This is like 10-20% difference right here. But no, I mean, we could have gotten under $1, and I was waiting for a pullback, just hoping it would have came back down to like this, you know, 80 range. Ignore the 70 here. Anytime you guys see something like this, because a lot of times it's just one person selling, you know, a couple hundred shares because they don't want to hold. So you've got this like mid 70s to 80 range. Would have been just a beautiful entry if it ended up coming back down, but this one hasn't. So this is one to definitely keep on watch. Let me go back here, PXS. And you guys can see they all have earnings coming up on the 8th. Actually, tops is 22nd. Today's date. That's 2 days from now. So that's Monday. So just careful. Tops has good ER. Then these shippers are probably going to start getting that momentum, probably all next week, and then they'll end up coming back down, and then they'll pop. But all these right here, GLBS, D6, eDry, Tops, SCIA, and PXS. And there's so much more out there, okay? You know, we got SHIP. Oh my God, why I can't even think right now. D6 dries. D6 dries, GLBS, eDry, Tops, SCIA, PXS, SHIP. Okay, so just going off of that, these are the ones I can think of just off the top of my head because for some reason I can't think. But they all got ER coming up. They're all probably going to get moves. Some of them are going to be just exponential moves of, I mean, hell, if we have it like last year, the year before, I mean, we're going to have a 1,000% mover. And the problem with it is not knowing when to start taking my entry, because obviously if something's going to move 1,000%, I don't want to get in when it 50 cents over where, you know, it's going to start from, because then it might only be a 500% move for me. So not knowing where the bottom is on a lot of these, I recommend going out and charting these out. We're not going to look at PXS because this one's just been grinding up, but you guys can look at like D6, and you can see this 101. It's went up to 160s, and right here 150 was kind of a resistance point. So look for this one to hold 150 going into November, and that could potentially be a good spot for you guys to actually jump in. Or if you guys can get closer to $1, that would be even better. And then going off the other ones, I'm not going to go through each one of these guys. Just look at the low on the 52-week, the low on the 20-day, 90-day. Look at different, just pull up this part right here. Okay, I'll do one for you, and then you guys just roll with this. This is September 7th, is where it hit that 52-week low at 101. All right, then right here, you got to 103. Oh, I thought that was more. But you got that nice little uptrend right here. Hold on. All right, that's a double bottom right here to right here. So boom to boom. That is not straight. All right, and then you've got your uptrend. Going off this one and this one right here. So this is where you got your uptrend, and then it finally broke under that trend. Now, say, basically from like right to ear to right there. Sorry, I'm thinking out loud. You guys got to see the top of this candle is kind of where this one started to uptrend a lot more. But this is we get a lot of the bigger traders that call shipper mania and shipper this, and it kind of sets these up to where you don't really truly know where the support line is. But close to $1, if you guys can get close to $1 on D6, or watch it near that 150 mark, if it doesn't end up coming back down. But that's like the high level, which I would not recommend getting in here yet. So I would say 120, and I would say off of $1. So just boom, boom, or boom. So look for it in this range right here. And that would be my recommendation for D6. And this is a very, very crappy chart. It's just me looking at patterns. It's not me looking specifically to the decimal point on where to actually, plot out your support and resistance. I'm just trying to do this quick. So that'd be my recommendation just on D6. Now on some of these other ones, just gonna plot out. I'd say just go off of like 6 month. 6 month. Oh my God. This one's also interesting because there's that gap right there. So, but the shipper should be on watch. If you guys don't know anything about them, like I said earlier, they like to run. So, yeah, so I'm saying GLBS has the lowest float from all of them. That is true. Yeah, Grin, that was the other one. Okay. All right, so here's the list. I think I put them in order on where I think the potential is on them. GLBS I think is going to be a big mover. I think D6 is also going to be a really nice mover, probably around 300%. This one over 500%. Well, no, maybe, because that would mean that this one's going up to like $30. God, this is a bad part. Anybody can go back on this video and say, well, you said it was going to go to this. So, but no, with trading shippers, guys, let's say that you end up overnighting 3 of them. And this is what I would recommend: overnight 2 to 4 of these, or swing 2 to 4 of these going into the day before November. So like right at the end of October, start looking at these to see if any of them dipped, and just understand that there is potential for them to go down, another 15% or 20%, and then finally make a move. So, put in some shares in a couple of stocks, and then build a core position, average down as necessary. And once they finally start moving, let's say you luck out, and let's say GLBS, you end up getting this one. This is how I would trade it. So hold on. Let's go to 5 day here. $4, $5, $6. Okay, let's say that you get in at $4.50 somehow, some way, without an offering. and then next day opens up at $9. Like, let's say that you can't trade pre-market for whatever reason. Say you're a U-stock user. Opens up at $9, breaks over 10 in that day, pulls back end of day towards $8. Hold the stock. Like, if you end up getting in one of them that is up 100% on the day from your entry, and obviously trade your own strategy if you want to. I'm not saying don't do this, and this is where I'm saying I'm not an investment advisor, but my recommendation for this is to hold for 3 days or at least 2 days, because you will get those exponential moves from your entry potentially. Normally, if I'm looking at a stock that I overnight or I swing and then out of nowhere is up 150%, normally I take profits, because 150% is a lot of money depending on how many shares you put in. So with shippers, it's just a different beast, guys, like altogether. I mean, they run for a few days and then they end up running again after just coming back down. Like, let's say you got D6 and dries, they end up going, and then tops goes also. And so you get those three, two of them go exponential, one of them goes, 300-400%, right? And then you'll go on to the next set and they'll kind of do something similar, but not as quite as big of a move. And then they'll end up D6 dries and tops will come back again, and then they'll get another run. See, one of the things here just to look at with Shipper Mania and a legitimate November Shipper Mania, D6 last year, okay, had an earnings, I think, on like the 14th or the middle of the month, right? It's already made a move. It went up to 20 something, 30, whatever it was, and then ended up coming back down. And I think it was like $7, right? It had earnings the next day, and everyone was saying it was risky. It's risky to overnight because it could have bad earnings. I'm like, it doesn't matter to me. Like, I bought in a really good sized position as pretty much a YOLO, but I kind of felt confident that even if it had bad earnings, it was still going to run just because it was D6, and it had bad earnings and ended up running again. And I was like, well, shit, I just doubled my investment right there, because I think it ran up to like another $17 or whatever it went to. So bad news doesn't always affect these stocks the way that you think that it will, like the earnings and the likes. So just be aware of that, that they're a different beast. You could honestly, you could buy in to these stocks and then take your 100% and be completely happy. But if you're going to do that, leave 25% in with a stop loss at your entry. Okay. And be willing to risk, like, you put 1,000 shares in, be willing to miss out on, $500 for the chance, that it may come down to your entry and you may get stopped out and not make that $500, right? But it could end up running, and that little 500 that you were up could turn into 1,000 or 2,500 or even more than that. So that would be basically how I would recommend trading the shippers this year. And that's only if it's going to be like last year. So, there's no way for me to prophesize and be 100% on any of this. Like, this list that I have over here on the left side of the screen, you never know. Okay. Maybe one of them goes, maybe two of them go, maybe all of them go, who knows? It's just my opinion on this. So, all right, last thing I want to go over is time of day, time of week, and how it affects the stock, and some patterns that I've noticed over the last, because the market always changes, but over the last couple weeks, it's been kind of reacting a little bit weird. So in the morning, you have a resistance level at, let's say, I mean, it's kind of all day, but you get the resistance level not near a whole number where there's a wall, right? You got a 100,000 wall at 38 cents. In the past, once you see that, well, not in the past, but whenever you see that wall starting to break, you could basically jump in and you get that rush of volume afterwards, and it would break the next resistance level and you'd be set. In the afternoon, if you try and do that though, 100,000 wall, and you see it starting to break and you're like, oh man, 20K left, and you jump in, more often than not, I've seen it break that resistance, go up half a cent, and then tank. And it's more so in the dollars, or the ones going for that dollar break. Let's look at some of these. AGRX. Was it this one? No. HSGX was perfect for it. I have to go back. Oh my God, come on. 20 days. There it is. Okay. So where were we here? Where's the 90s at? Great, it's not going to show it. All right, so basically what was happening here, and we'll just look at this day, okay? And this is a 1 hour chart, so it's not going to really show what I want it to show. But if I was looking at a 1 minute or a 5 minute, it'd be a lot easier. Actually, I can do that. Time frame, 20 day. Let's go to 10 minute. Where's my dollar at? All right, perfect. Go to right here. And HSGX, this was going back to where I was taking YOLOs because I figured they would break $1. This one I was telling Ultra that it was going to run over 120. It ran to 143 in that day. But anyways, HSGX. So right here, we hit 97, okay? And 97 has been that resistance point on so many of these tickers that are, gapping up or trying to fill a gap. We just look back on some of them. You got Trop, you've got HSGX. I can't really remember the other ones. But anyways, they end up going for that gap fill. They hit 97 and come back down. Now, right here, you could have seen 100,000 volume right in that 96 to 97 range and break down a wall, yet it still comes down. Like it's some kind of manipulation, whatever it may be. This one ended up coming right back down to 80 cents. Going right back up to that test again. Got to 90, 96, 97. Came back down again, and this was the key. Okay, it held the 80s. So with this one, it was kind of a perfect storm. But once it finally gets over that 97, and what I see a lot of times is that people are buying this 97 cents. Like, oh, there's a wall there and it's coming down. They buy the 97 cents and then it gets rejected somehow, some way, even with the hundreds of thousands of shares being bought at that level, or tens of thousands, we'll say. Ends up coming right back down, and then we finally end up uptrending and breaking it. But it's always, and I was saying this in the room over voice, I was like, look guys, like, don't buy the first dollar break, like, ever. Like, if it's looking like it's a perfect setup and it's like, oh my god, this is going to break $1, more than likely it's not, because for some reason it gets that 97 mark. And I've seen this on so many different tickers where it hits that 97, comes right back down, buy that dip and sit on it. Because there's potential with these gap fillers that's how they've been reacting. Next week could be different, but this is how it has been for like the last month. So after that, it goes right back up. So that's pattern recognition, I guess. Time of day, though, look for these resistance breaks outside of the gap fillers, like on a regular ticker. You can look at TTMP, for instance. In the morning, breaking that 30-cent mark was gold. Okay, that was a big resistance break. So in the morning, it works out great. In the afternoon, it does not. And perfect way of pulling it up is right here. That 35 mark right there was that resistance point, right? That's afternoon. From lunchtime to afternoon. In the morning, whenever it finally broke over the 30, where is it at? Oh, hold on. No, it broke in the afternoon. Okay, so this one is not working for me at all. All right. So anyways, what I've seen, though, like a lot of times the resistance breaks in the morning work out better than the ones in the afternoon. Obviously, there's going to be just worked out perfectly that the one that I pull up here is the one that doesn't prove my point. So great. So anyways, just time of day, time of week, they all have some type of factor in the actual trades. You got to look at volume in the morning from 9:30 to 9:45 is going to be the highest volatility. We'll even push that to 10 o'clock. 9:30 to 10 o'clock is going to be some of the highest volatility that you'll ever see in the market. Same thing with the last 15 minutes of trading. The volume will increase. You can see right here, but every once in a while with these gap fillers and other market trends, you'll get the midday moves, but not always. Usually lunchtime stuff will go for a wall break. It will chip it away, and then you'll jump in, and then it'll come down because the volume isn't there to support the price moving up. So that's basically what I'm just trying to say. that morning, you can actually make or break your account. If you trade smart, you can make your account and get this like initial run, sell off, wait for it to build that base, and then get right back in and let it uptrend and work for you. So make your trades work for you rather than chasing everything and trying to buy up here and not selling right there. So I think we covered everything. We went over, what time is it? Oh, Jesus. I really wanted this to be like a 30-minute video because nobody wants to watch a 2-hour video. And we're looking at almost 2 hours now. So we talked about the up gappers on the scanner. And you can go over the last video. I mean, it's so much more in depth. You just got to search for it. But I felt that I kind of covered everything that you need to look at whenever you're building it. We looked at pattern recognitions. We look at shippers, how to trade out of the halt, and how time of day, time of week affects the trading. No clue why it took 2 hours, but it did. So I don't know if anyone's got any questions or if anyone's still on. Yeah, Speed, appreciate it, man. I'm a ninja. Okay. Oh, you want to talk about the rest of the market scanners and how to use data for your trading? Well, here's the thing though. I use the audio mainly, and then God, I don't have a screenshot of an actual scanner, like a trade idea. It's like the whole thing that he's got set up. I never snipped that one off the desktop. Well, there's a whole bunch of different things on there. If you guys are looking right where my mouse is, let's imagine that this is static scanner right here. For whatever reason, this is it. All right, so use your imagination. Up on this top side here, in this section, the top left, there's going to be a market movers section. Use the market mover section for stocks that are on the move. You're going to... Here's the other thing, though, guys. Like, it's going to say, like, huge volume spike, unusual volume. It's going to have different things and factors in there. Whenever you're looking at it, same thing. Look at it'll say volume on the day, gap up percentage, change since close, and then volume on the day. I think I said that already, right? And then the float size. So it'll have a lot of the same factors that you see pre-market. It's just set up a little bit differently. So you've got that section right there is the one that I use the most. I think down here in the bottom middle is where he's got the down gappers, I believe. I can't remember. I generally just use this top, and more so I just listen to the audio. And it's just recognizing different tickers based on what was going on in the morning. So whenever I build my watch list and put it all over here, yeah, we got Yeko and we got CCCL and all these other ones, and LMFA was on there for whatever reason. But you hear these like cult stocks, or you hear some of these Chinese tickers being called. It's literally like I hear CCCL. So what do? Instantly, CCCL. I make sure I got my 1 day on. I start looking here, and I'm like, okay, what's going on with this one? It's starting to get volume here. So then it's instant. Pull up the 5 day. Okay, low 130, high 645. It's getting. And here's what I'm looking at. We're going to act like I'm hearing it right here in this range. Okay. And it's on this first candle. And it's not going into halt. Obviously, this is just me kind of going over, but this is generally what I do. I hear it on the scanner. I instantly pull it up. If it's a price point and a stock price that I already know where high or low is, I may just jump in immediately because I know that stock. I don't recommend that for you guys if you're newer, because you really need to know the price points on these stocks from research and studying and where you think that they're capable of going. So whenever I'm building my watch list in the morning, I'm not just looking at just the ones on the scanner. I'm looking at some of the other ones that are out there in case they have that potential look to them, So I'll pull up the 5 day, I'll pull up the 20 day, and I'm like, okay, cool. This is a good range. I'll zoom back in here, and I'll be like, all right, cool. We're right. This one's got the equivolume correct on there. Hold on. So I kind of look back here, see, okay, cool. High possibly take my entry, whatever it may be, just based on this increasing volume that you're going to see here. Right here's literally nothing. But, you know, let's say I got in like right here or right here. I mean, just let it ride out. I mean, it's just it's so hard to explain without like real time. So, I mean, I hope I'm not doing a terrible job at it, but it's just listening into the scanner, looking in that top left section throughout the day for anything that might be popping up that has that right look to it, that right float, the right volume, and the right name. And just once you're doing it for, I guess, a certain amount of time, it's just second nature that you know, the audio, Pepper or whatever, I mean, she'll go up and she'll say 50 stocks an hour on that scanner. I'm not looking up 50 stocks. I'm only looking up like 4 or 5 of them just because I know them. So it's just, once you guys are in it for enough time, you'll start to know which stocks run, which ones don't, which ones are heavy, which ones are light, which ones are thin on the ask side, and you know which ones have that capability of moving based off of sympathy to this one or that one. And just eventually you'll get to a point where you can say, okay, well, this one's going, this one has no volume, but I'm going to take a speculative entry in it because it usually runs off it, and then just rolling with it and waiting. And that's the point that we all want to get to, you know. So it's just a matter of time. So, all right. hopefully this hopefully it was beneficial for y'all. I'm gonna go ahead and close it out for the night, but next weekend, yeah, it should be available next weekend. We'll do another one. So yeah, if you guys aren't subscribed, go ahead and subscribe to that YouTube basic stuff where I gotta tell people to subscribe. But you know, hopefully everyone has a great weekend, and hopefully this helped. And then next weekend I could probably do one right before shipper month and see if there's any updates to it and go in depth on that. Outside of that, I mean, just go ahead and jump on Discord, ask any questions there throughout the week if you guys need any help. Myself or any of the rolled members that are in there, we're more than willing to help you guys out. So, all right. Have a great night. Now I got to figure out how to shut off this stream.